Good afternoon and welcome to FX Week Ahead live market analysis with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. A very warm welcome to you. Hello, Ali, Salvatore, Sean. Good to have you on board. Just as other folks are coming into the webinar, I will just go through the disclaimer as folks are coming in, just to make it clear that as we're looking at the FX week ahead, what we're doing is we're looking through the eyes of a professional trader to understand what it is I'm looking at the scheduled events of the market which are likely to move the market. So the idea is as you look over my shoulder, watch what I'm doing, you get the idea of how I interpret the market and get prepared in advance of certain events. Now, what this isn't a signal service where I tell people where to enter, where to exit, where to take profit. Although we do discuss entries, exits, and take profits, it's all from an educational perspective, and it's certainly not from a signal service perspective. And the reason that's so key is because market dynamics shift so quickly. So the whole idea of these week aheads and workshops is to teach people how to recognize what those market dynamics are and when they change, so people can make their own trading decisions without necessarily needing someone else to do it for them. So that's the whole idea of this. It's an educational time. So I hope you find this time useful. And there's a lot on coming up for the next week. So we have got a busy week for the final times in December, before the holidays really start moving in earnest. So busy week and a week with plenty of opportunities. Now let's get going. So I want to look at some special events first. And the special events I want to look at first of all is key geopolitical events which we've had last week, and we had two major ones: Brexit and some progress potentially between the US and China trade negotiations. So first of all, let's look at the Brexit scenario. We had a Conservative majority win. Now, just as a quick recap, the Conservative government, led by PM Johnson, wanted to agree a withdrawal agreement bill, nicknamed the WAB, in order to ensure a Brexit occurred and that the UK split from the EU. However, PM Johnson was unable to get sufficient support in Parliament to get Parliament to agree to that withdrawal agreement bill. So what PM Johnson did in order to try to break that political gridlock and that political blockage is he called a general election, and the results of the general election were in, and the UK resoundingly has supported the Conservative government who want to take Britain out of the EU. And so we saw this Conservative majority win, plus 47 seats, and Labour lost 59 seats. So the Conservative Party was the one that was really offering and signalling a strong ability to withdraw Britain from the EU. PM Johnson's, for those of us in the UK who were following it, he had this catchphrase, which was, "Let's get Brexit done." It became quite irritating to hear it over and over again, but the people in the UK have seen that the Conservative Party is the party to actually get Brexit done. So the reaction we saw in the pound was a strong buy in the pound. Now, I don't know if any of you guys were trading this. Let's have a look. Okay, so here's the pound US dollar pair. Just have a little look. Now, it was since October when moves were being made in the pound for withdrawal agreement bill. That's when we saw the pound rise, okay? And we've seen these steady bids in the pound. Then we had this range between 1.3 and 1.28. And I thought that range would kind of hold into the elections. It didn't. It broke out of the range, and prices picked up to that 1.3500 area. So that was the announcement on the UK election, and that was with a strong majority win. We expected that spike in the pound. Once again, what I'm expecting now is that 1.3500 level to hold for now. okay, because a lot of the good news for that Conservative majority win has been priced in now to the pound. So the pound's going to reset. I'm going to show you the key event that I see for the pound this week that's likely to set the near-term direction. But I just want to flag that up to you. I don't know if any of you guys traded that. Did any of you guys trade the pound? Just put it in the chat or the question panel. And it'd be interesting to know if any of you guys traded it. And if any of you took that expected pound spike on the announcement, which was on the exit poll. So here's just a quick learning point for you. That spike in the pound was largely on the exit poll. Now, exit poll in the UK is generally pretty reliable and gives an indication of the result. So the exit poll predicted the Conservative majority win, and it got the number of seats roughly right. So that's why we saw that spike in the pound. So just watch that for future UK elections. Watch for the exit poll, which is announced as the polls close. A very important poll to look at. So what's now from the pound? Let's start getting our head around what's happening in the pound. I will cover this in more detail tomorrow as a special edition for the workshop, but as a very basic outline, what we're expecting from here is we're expecting the withdrawal agreement bill to be brought back to the House of Commons. Now, the plan at the moment is to try to get that withdrawal agreement bill back to the Commons before Christmas and to get it passed. That's what Boris Johnson is very, very keen to see done, understandably, okay? And then once the withdrawal agreement bill is passed, then Brexit Day is due for the 31st of January. That's the plan. And then if that all takes place as expected, which is it's expected to now, no surprises there, that's just expected to happen, then there is going to be a year with the UK trying to work out exactly what the relationship is between the EU and itself. This is the more unknown section. And in a way, the relationship between the UK and EU will be just as much in the dark as it has been for the coming year. So that's why many analysts and commentators are expecting more pound downside and pressure coming in to this sort of year of trying to work out a relationship. Now, the EU are skeptical and they haven't got confidence that a year is going to be long enough to sort a deal. So if the deal isn't sorted, then the transition period, as it's so called, will have to be extended. So can a new deal be agreed between December 2020? Can it be done in a year? Yes, then there's a new relationship with the EU. Okay, that's all potentially good for the UK. No, can that not happen? Then the transition period is going to be either extended or the EU leaves without a trade deal and trades on WTO trade terms. So that's the rough outline for what's happening with Brexit. And pound supported today on this news that the plans are underway to start process with the withdrawal agreement before Christmas. That's what we see. That's where we've seen some pound support today. Just look down onto the chart, this support level finding support. The other key geopolitical event that took place was the US-China Phase 1 trade deal. Now, the Phase 1 trade deal is expected to be signed in January now. There was an announcement at the end of last week on Friday about this Phase 1 trade deal essentially being struck. However, for those of you who are following what was going on, it was very, very confusing because China and the US seem to be contradicting one another exactly about the nature of this deal. So we're in this crossroads at the moment where the US and China have apparently agreed a deal. It's due to be signed in January, but the exact nature of that deal, there's some contradiction and confusion. So for me, as I'm looking at this situation, I'm still very cautious. And if you notice President Trump's negotiating style, look how he negotiated the USMCA agreement between Mexico, Canada, and the US. It was constantly threatening to pull out at the last minute, threatening tariffs, saying we'll get a deal done, threatening increasing tariffs. So I'm expecting this ambiguity for me plays into Trump going to, have more negative news. Now, obviously, I could be wrong. This is just my personal opinion. But one thing that I'm for sure is I'm cautious. I think there's a lot of caution about whether this deal is actually doable. Now, the commodity which I'm personally interested in on this trade deal is gold. Now, if you look at the gold chart, just very briefly, okay, you look since December 2018, okay, we can see that gold has been bullishly bid. It's been bought from $12.50 up to $15.50, $100 an ounce. So strong buying gold. Obviously, gold is a safe haven commodity. When the market participants are worried about the future of global growth, and when they're worried about low interest rates, where do they get returns, then gold becomes attractive, and it's been bid. Now, we recently have seen gold pull back to this 1450 level, and it's been finding some support. We had the FOMC minutes out last week or the week before, and the Federal Reserve were essentially saying, Jay Powell was essentially saying that that inflation needs to really pick up quite considerably before the Fed's even going to consider raising interest rates. So the Fed seems to be quite happy to keep interest rates flat, not looking for any hikes, and the market generally took Jay Powell's statement to be bearish. So we saw US dollar weakness. Now, for me personally, if I've got US dollar weakness from the Fed being neutral to bearish, that's supportive of gold, because gold is paired with the US dollar. Gold is also a safe haven commodity. So for me, what I'm looking for is I'm looking for a further breakdown in US-China trade deal. Now, if there is a breakdown, if President Trump is very negative, then I'm expecting I'm expecting the gold to be bid. Any breakdown that US-China trade deal, I'm expecting gold buyers to enter the market instantly. I'm expecting stops below the lows. And the interesting thing that I wanted to flag up to you guys today is that in the month of January, for the last 7 years, gold has been bid every single month of January for the last 7 years. So we're heading up to January, and the reason for those gold buyers in January is that it's the Chinese Lunar New Year, and one of the traditions is buying gold. So this huge country buying gold as a tradition increases demand for gold and increases gold prices. It's been one of the most reliable seasonal commodity patterns that there has been in recent history. And so as a result, I know that there's some technical and fundamental reasons. So technically, this would be a good stop area, and then this could potentially be a good buy at good value running into January. Now, obviously, this is not trading advice. I'm just explaining to you what I'm looking for and the triggers I really need to confirm that. If the US-China trade deal is really going well, everyone's really optimistic, and everyone thinks, wow, President Trump has a complete change of face and US and China become best buddies, then I expect gold to fall and to carry on falling down, because it's a safe haven commodity. And if the world's confident that everything's going to improve, US and China are going to do well, that their good relationship is going to have a knock-on effect to global growth, then I would expect gold to fall. So that's kind of the trigger that I'm looking at for me, and I hope that's helpful for you guys to see what I'm looking at and why I'm looking for it. Now let's get into the week ahead. A busy week, so I'm going to get into the detail, the nitty-gritty of what's going on. These are some of the issues we're going to be looking at. So let's go into the calendar. Now, first thing to mention, we had some good industrial production year-on-year data out of China. That's excellent news, because if we see Chinese industry increasing, that's good news for global growth across the world. So that was a bit of good news over the overnight. So good one to look at. We saw some Euro and German manufacturing and service PMIs. These are important because it just gives us an indication of how the Eurozone is doing. Now, the Eurozone, you can see generally, look at the manufacturing PMI down in France, down in Germany, and these indications are poor because they show that the Eurozone is still slowing. The Eurozone is in a tricky situation at the moment, and the reason it is in this tricky situation is that the general outlook for the Eurozone is pretty grim, and the interest rates are expected to be low. We've got this quantitative easing program coming out of the ECB. So this negative data out today just confirms that negative bias for the euro. Okay, so there was nothing there to be optimistic about for the euro. This is an interesting one here. Business confidence. Now, business confidence is important for the Reserve Bank of New Zealand because it's an important factor in whether they raise or cut interest rates. So if you look at the last week's business confidence, you can see that it was minus 26.4. Now, obviously, that's still in contraction, but it was an improvement from prior lows. So the business confidence, although it's still negative, it's less negative than it has been. So the key focus for the New Zealand dollar this week is going to be this business confidence data point and this GDP data point here on Wednesday at 9:45 p.m. That is third quarter GDP. Now, if we see a pickup in business confidence and a pickup in GDP, then the outlook for the New Zealand dollar is likely to be better. Okay. If we get weakness in this business confidence and weakness in the GDP data, then the market's going to start, pricing in the idea that the Reserve Bank of New Zealand will be cutting interest rates. Okay, so I'm particularly going to be looking at the Australian dollar, New Zealand dollar pair this week, and I'll show you why when we cover some of the Australian data. But the market kind of baseline at the moment is pretty supportive of the New Zealand dollar. So if this shows that support, I'd expect more New Zealand dollar strength. And if it contradicts that support, so you get really weak business confidence and then a weak third quarter GDP, I'd expect quite strong New Zealand dollar selling. So we're kind of at that crossroads point for the New Zealand dollar, but business confidence will be key going forward. Now, the pound is coming back. Economic data is coming back into focus. Look, we've got PMI and services data. That's obviously still too early to see any uptick from the elections, but we have CPI data, which will go into importance now, and we have retail sales. Now, traditionally, retail sales in December will allow for Black Friday, so traditionally you get a little peak, but those retail sales this week aren't expected to show a peak because of the way the November retail Black Friday retail sales data was calculated. So next month's retail sales often surprises. So just to be aware of that often UK retail sales surprises after the Black Friday sales, which is in November. But this data point, the way it's calculated, it just falls outside and doesn't allow for the Black Friday data. It'll be on next month's retail sales. Just remember that. Typically get a spike. The spike only lasts for about 15 minutes, half an hour. I remember reading an article on Bloomberg about this. But however, it can be potentially worth it for a quick spike trade. That's what traders look for. Obviously not trading advice, but it's an observation on that data point. Now, this is the key issue here. Now, we have the monetary policy summary from the Bank of England, and the focus is now going to really go onto what the bank are saying. Now, let me show you here. We have the pound. For years, the pound's focus has been Brexit. Get Brexit done, then we can start looking at the data. So now the market is really going to be focused. What do the Bank of England say? What do the Bank of England think? What's their perspective on interest rates? Will they be cutting? Will they be hiking? What outlook do they have for the economy now that Brexit looks almost certainly, is expected now? The doubt is gone. It's expected to be done and delivered by 31st of January. So the Bank of England now is key focus. So the direction of the pound is expected to be pulled by this Bank of England vote on Thursday. So that is a key indicator, and I would expect the pound near-term direction to be set by the Bank of England. So this is one to watch, and I'm not expecting, obviously I could be wrong, and this is just my opinion, but I'm not expecting this 1.3500 level to be breached before Thursday for sure. And what I'm anticipating is I'm expecting the Bank of England to kind of highlight the risks that are ahead. So I would expect a move down in the pound, okay? Now, obviously, this is just my opinion, and I don't know. I can't see the future. But what we can know is I can tell you some of the triggers. So the trigger will be, what path of interest rates does the Bank of England see for the future? If the Bank of England on Thursday say, you know, we're really optimistic about the economy, maybe I'm seeing some good data coming out and we're optimistic, then we might be raising interest rates and expect the pound to push up through that level. But if it's like, no, we're not sure, we're still uncertain about the exact nature between EU and UK trade deal, then expect downside and we're going to be cutting interest rates. So look at the path of interest rates and look at the market correction for the pound on Thursday. That will be key. And obviously, for those of you who attend my workshop, remember, I'm always looking to pair a weak currency and a strong currency together, okay? So look for weakness or strength in the pound out of Thursday, and then try to pair it with a weak or strong currency. That's the way to do it. Now, Thursday, we also have employment data. Now, employment data has been very important for the Australian dollar and will continue to be important for the Australian dollar. This is a real mover. So you can see the way you've got the New Zealand data and the Australian data out quite close together. So there could easily be a good trade potentially setting up on this currency pair, the Australian dollar, New Zealand dollar pair. Now, okay, if the employment change, if that boosts up, and remember, we're looking at not just the employment headline, we want to see the full-time and the part-time. Remember, full-time jobs are better than part-time jobs, okay? So if we see a drop in full-time jobs and a drop in part-time jobs, that will be negative. If we see a pickup in full-time jobs and a pickup in part-time jobs, that will be positive. The more pickup in full-time jobs, the more positive it is for the Australian dollar. So that's really one to watch, be aware of. And again, the unemployment rate. The lower the unemployment rate, the better. Okay, so if unemployment rate is 5.3%, if that drops lower, if only 5% of people are unemployed, that's great news for the Australian dollar. So keep these three data points together. Employment, full-time, employment, part-time, and unemployment rate. For a strong move in the Australian dollar, you want all three of them to be in agreement. Headline jobs up, full-time jobs up, part-time jobs up, unemployment rate down. That's the most bullish case for the Australian dollar. So with the GDP data out on Wednesday, key focus now for the Reserve Bank of New Zealand, they've got into a neutral data dependent mode. This GDP is key and will really give us an indication of what the RBNZ will be doing next year in terms of rates. So the currency pair to look at is the Australian dollar, New Zealand dollar pair. Now, look, you can see the pressure has been on Australian dollar, New Zealand dollar bearish. Okay, it's been strong selling because there's been a divergence in the outlooks between the two economies, and the New Zealand economy has been, more robust in the market's expectations than the Australian economy. So if this week we get a further divergence between these, so if we get the Australian dollar weaker, New Zealand dollar stronger, then I would be expecting Australian dollar, New Zealand dollar sellers on pullbacks, okay? So that is the outlook to be aware of. You can see here, look, there's a bearish outside, bearish engulfing bar just forcing this down. We've got near-term support here at 1.0400, and we've got another long-term significant support level here at 1.0350, okay? So just be aware, you've got this heavy support level. So if there is a bearish outlook for this currency pair and you're looking at going short, remember that this level here, the 1.3, I would put it, the first level here, sorry, this is fiddly, the first level is here, 1.0350, okay? And then there is potentially a further level down here, 1.0325, 300. But once price moves into that area, you would expect profit taking. So just be aware that if you do short that pair, if the currency is suiting an Australian dollar, New Zealand dollar short, typically profit is taken at these levels. So don't get greedy and try to hold thinking that we're just going to break these levels here and go down to 1.0. There tends to be profit taking at these levels. That's what a lot of professional traders will be doing. Be aware of that going into the event. Friday, we have core retail sales out for Canada. I'm just to remind myself what's going on with Canada. Yes, on Canada, I can see here on my notes, CPI data is going to be a key issue to watch. Okay, the Bank of Canada had been quite hawkish. They have since dialed back their hawkish expectations and are much more neutral. If the US-China trade deal does get signed and is positive, then the outlook for the Canadian dollar continues to look good. A strong CPI print here would favor more Canadian dollar upside. So that's certainly an event to be well tuned in for on Wednesday, December the 18th, 1:30 p.m. And the market, a weak CPI reading here and an interest rate cut will start to be priced in for the Bank of Canada. So we'd see quite considerable CAD weakness. So this is a trigger. I think the biggest trigger for the CAD would be a weak reading here. But certainly that's an event I'll be looking at and attending. And if you're working and can't attend it, make sure you check in, read the notes, see what analysts are saying, and try to work out whether it's strong or whether it's weak, and then pair it with another weak or strong currency. Okay, folks, I hope that's been helpful. I hope that's helped you to navigate your way through this week. A lot going on. And of course, don't forget the unscheduled events that are due to happen, which of course will be President Trump and President Xi, well, certainly President Trump tweeting on the US-China trade deal. So expect more volatility coming from President Trump. And I would say he starts to wake up around this time, 1:30, we start getting his tweets coming in. So I am expecting some safe haven volatility now as we get the latest move from President Trump. Okay, folks, I hope that's been helpful as you look ahead to what's coming. Don't forget, we've got our workshop tomorrow. I'll be looking at the pound in more detail, and I'll also be looking at any near-term opportunities that we have. And I might go through that gold position again and show you some of the statistics for gold so you can see it with your own eyes. Okay, guys, thank you very much for attending the FX week ahead. Hope you all have a good week. Ali, Hashik, Smel, Nathan, Sean, Salvatore, you guys have a great day, and I hope to see some of you tomorrow at the workshop. Take care now, guys. Bye.